Okay, let's go ahead and jump into this. It says we're live on Zoom, live on Facebook. Hello, everybody. Thanks for being with us on this pretty Friday. My name is Ashley Jones. I'm the Managing Director of Community Programs here at the Venture Center. And today we have a great VCChat for you all about PPP loans, PPP grants, and everything you need to know as it pertains to the SBA, lending options, financing, all that goes on, and some of your CPA and financial questions as well. We've got Edward Haddock, Itzel, Meador, Bert King, TJ Boyle, and Jason Thomas. I'll let them all introduce themselves in just a moment, but thank you all for being here on the panel today. Did want to take a moment to thank our sponsors, Frost Accounting Firm, Wright Lindsay Jennings, Simmons Bank, and the Little Rock Regional Chamber for all of their support throughout our community programs in the year. Also wanted to mention those programs. First, I'll back up. The Venture Center, for those that aren't familiar, is a 501c3. We are a nonprofit who is around to support entrepreneurs, workforce development, and also economic development. So if you are an entrepreneur, need help navigating or growing your business, the Venture Center can help. We put on weekly programs all over different topics. And so some of those upcoming programs I wanted to mention, we have a workshop coming up on PR, public relations with Stoneward's Dana Berry, and that's going to be February 9th at noon. So if you're interested in that, want to learn more about public relations, you can tune in then. We also have a FinTech panel with our ICBA cohort. So we run a financial technology accelerator. One is going on right now with the ICBA. A few of those founders of the companies are going to come in and talk about their entrepreneurial journey. That is February 12th at noon. Be sure to register for that one. Also, some of you may have heard there's a new Ready for Life initiative that's taking place here within the state, all about education, workforce development. We've got some folks involved with that. They're going to be on a panel with us on February 17th, also at noon. And we also have a Lift the Rock panel featuring the Arkansas Parks and Tourism, as well as a local entrepreneur. And that'll be February 19th at noon. One other program that I want to mention that's gotten a lot of buzz lately, we launched a new program called VC Health. And so this is a 12-part mental health series that focuses on entrepreneurship, employees, entrepreneurs, and how mental health affects those folks. So we want to do our part. We've partnered with the Bridgeway and Chenal Family Therapy to bring this together, covering all different topics, PTSD, how you navigate relationship with spouses, children, how social media influences mental health, and a host of other topics. These take place on the final Friday of every month, so I wanted to make everyone aware of that. If you're interested, you can find all that information on our website. So with that, I want to turn to our panelists today and let them introduce themselves, and then we'll get into some presentation and talking points. So Edward, I'll start with you if you want to go ahead and introduce yourself.
Great, welcome everyone. Thanks for having me. I'm Edward Haddock, District Director of the U.S. Small Business Administration's Arkansas District Office. We're here in Arkansas. My team of 6 and myself cover the entire state of Arkansas and all of SBA's operations within the state. So thanks for having me here today.
Thanks, Edward. Itzel?
Hi, I'm Itzel Meador. I work for Simmons Bank. I'm the SBA Regional Manager. I cover the entire footprint of Simmons Bank as far as anything related to SBA loans regarding to sales. I cover the Arkansas, Texas, Illinois, Kansas, Missouri, Tennessee area. So I stay pretty busy. So I'm pretty excited to be here and be able to help answer any questions.
Thank you so much. Bert?
I'm Bert King with Arkansas Capital. I'm Senior Vice President. If you aren't familiar with Arkansas Capital, we're a nonprofit economic development lender. Been around since 1957. We also have a designation as a CDFI, or a community development financial institution. And we started the state of Arkansas as kind of our bread and butter, but we branch out a little bit to Tennessee, Mississippi, and Arkansas.
Awesome. TJ?
Hi, I'm TJ Boyle. I'm with Frost. We're an accounting and advisory firm based here in Little Rock, Arkansas. We've got offices in Arizona, North Carolina, and also Florida. And I've been working with we put together a COVID PPP team about 10 months ago, and I've been working with that. Over that, I'm a partner with the firm.
Great. And Jason?
Thanks, TJ. Jason Thomas. I'm a tax partner here in Little Rock with Frost. As TJ said, we've been working on this since the very beginning. Clients all across the U.S. dealing with a wide variety of issues on these loans. So we hope to be able to help you guys out today and going forward.
Thanks so much, Jason. And with that, I want to turn back over to Edward. Edward, you were with us a few weeks ago talking about PPP updates, things to prepare for as this PPP initiative kind of launched and was getting going and underway again. Can you give us a recap of some of the talking points from that and any additional updates that the folks watching need to know about?
Sure, absolutely. So in the original VCChat that we were on, we were really talking about the Economic Aid Act that passed December 27th of 2020, which reauthorized one of the programs in which was the Paycheck Protection Program. Amongst that, there was other coronavirus relief efforts within that bill. So what I want to do is cover a couple of those topics and let you know where we're at on each of those programmatic, those programs and where they stand at today. So one of the ones we talked about last week or last time I was on was the SBA debt relief program known as CARES funding, or the Section 1112 payments. And that's where if you had a borrower, or if you were a borrower with an SBA loan, whether it be a 7A, a 504, or an SBA micro loan, you were authorized to get 6 months of principal and interest paid on your behalf by the SBA to help free up some of the capital in your business and let you use that for other expenses that you were facing. So the Economic Aid Act restarted that program, and what it did is it extended authorization out to those businesses that were not only covered by the September 27th date, but their loan didn't have to have been dispersed. That was the original rule under the CARES Act for the Section 1112 payments, is your loan had to have been dispersed. Well, they changed that legislation in the Economic Aid Act and covered more businesses and more entities that had SBA loans approved, but not dispersed by that date. So those principal and interest payments are now eligible if you had a loan within that time frame, the September 27th cutoff date. Now you're eligible for that 6 months of principal and interest payment. Additionally, under the Economic Aid Act, they've also added some more support to give hard-hit businesses an additional 3 months of principal and interest payments under those acts. So as part of that, if you have an SBA 7A, 504, or microloan, you automatically qualify for those payments made on your behalf, and you can begin working with your lender. Your lender will be the primary source of information when it comes to SBA remitting those payments and taking care of that funding. Additionally, most of you are familiar with the economic injury disaster loans and what we rolled out as the EIDL grants, which were the grants for $1,000 per employee up to 10 employees, the max $10,000. Well, this act also restarted those economic injury disaster loan advance grants, but now they're called targeted EIDL grants. And what they're going to do is target those grant funding opportunities to low to moderate income individuals who applied for the first round and didn't get the full amount if they were authorized. So they didn't get the full 10,000, maybe they only got 3,000. The first round of funding is going to go to those individuals to help make them whole up to that $10,000 mark. They're going to look for, and SBA has already started the process of sending out invitations, to those applicants who qualify under the new criteria under the Economic Aid Act. SBA will actually proactively send a request out to the borrower from a SBA.gov email address, asking them to come back into the system to add some additional information so they can qualify for those targeted economic injury disaster grants for those low to moderate income areas. So that program started rolling out invitations earlier this week, Wednesday. The first invitations went out to the first 100 individuals. So really what I want you to take away from this is if you did apply for an EIDL grant and you did receive funding and you are in a low to moderate income area, then you're potentially targeted for the first round of payments on this. So keep an eye on your inbox. Make sure you're keeping track of those loans and those invitations if they do come, and hopefully vet those to make sure they're coming from a legitimate .gov, SBA.gov email address. Finally, we've also put out some new information on the Shuttered Venues Grant. That is the new SBA program that was authorized under the Economic Aid Act. And that's specifically for those live venues, theater operations, performing arts organizations, museum operators, zoos, aquariums, who all meet that specific criteria that's added in the grant. They must have been in business as of February 29th of 2020. And they cannot have applied and received a PPP loan after this December 27th date. So if you originally got a PPP loan before the August 8th cutoff, the original cutoff, then you can be eligible for the SVOG, or the Shuttered Venues Operator Grant. However, if you're applying for a PPP round 1 or 2 under the new Economic Aid Act qualification and funding, then you will not be eligible for the Shuttered Venues Operator Grant. That Shuttered Venue Operator Grant is really targeting our theatrical producers, live performing arts centers, the ones that have been impacted most by a remediation or prevention of gatherings and mass gatherings in public places. So you can find out more about these programs and of course, the Paycheck Protection Program, which we'll talk more in depth about today, at SBA.gov. And then once you get to SBA.gov, you can type in funding or follow the coronavirus funding relief options and find out all your options under the coronavirus funding relief options that are available to not only small businesses at this point, but nonprofits and other eligible entities. So I'll pause there and I'll pass it back over to you and we can begin some Q&A.
Perfect. Thanks, Edward. And as he mentioned, the SBA website, I'm sure we'll link to it here in the chat. It's a fantastic resource. There's lots of questions that I know you all have. It may be a little bit overwhelming, whether it's your first time applying, second time. So be sure to use that SBA website to have your questions answered, and don't forget to reach out to your lender. Before we open it up for questions, I want to touch base with our other panelists and talk about their perspective. So for Itzel, from your perspective, I want you to talk a little bit about how banks, or your bank specifically, is handling this loan, and any other additional information you'd like the audience to know.
Okay. Well, Edward, you did a great job of explaining the Economic Aid Act. That's really opened the doors for us as SBA lenders. I've been doing SBA lending for 20 years, and I can tell you that SBA is a vital source or a vital program for small businesses anytime they've endured any type of recession, economic stress, and knowing that these programs allow the business to have more liquidity during a time of need really is vital. So we are here at Simmons, we have an SBA program, have always had SBA programs available, but now it's more common language as times have changed, and there is a need to make sure you're prepared in case COVID were to impact your business again, or any other unknown or unforeseen situation. So having the SBA program does allow us to provide the client with longer terms, lower down payment. And so that is one of the many things that we can offer are the SBA programs that we've got in place now, and with the enhancements of the Economic Aid Act, we obviously are able to be there for our clients even more. Of course, the PPP loans are a hot topic. We've been involved in the first round. We had 8,208 applications the first round. We got those approved. $975 million were approved by our bank. Again, our footprint 7 states. So this is discussing statewide, not just discussing statewide, sorry, discussing the full 7 state footprint that we cover. We are predominantly helping businesses that are small in our community. Most of our loans, over 85%, were under $150,000, which equated to approximately 100,000 jobs that were saved or, impacted through the PPP program. So obviously we felt that that was such an important part of being able to help our community that we are involved again in the second round. It's different than the first round. The first round, everybody kind of stopped and everything was focused on the first round. Now we have a little mixture of life. We've got some businesses that are doing very well and are expanding and moving forward. And we've got some businesses that are still struggling. So we're trying to be there for our existing customers, but we're also open to non-customers to be able to be there for them as well. So that's important for people to recognize. Not all banks are willing to provide the second round if they're not existing customers or they didn't do the first round of PPP loans. We are willing to do it at Simmons Bank. Even if you never have approached us before, we're willing to help you through the process. So if you want to be involved, want us to get involved, we can definitely help you in those steps. So far, we've had 4,200 applications, which it's about 250 million in PPP dollars that we're looking at funding so far. And again, the number is low. The loans are typically under $150,000. We feel like this go round, there's going to be even a higher. It wouldn't be unlikely to have like 90% of our loans at $150,000 or less. We've processed about 1,000 so far. 700 have been submitted to SBA, and we've got about 500 that have been approved by SBA. It's a different process. So I do want to make sure you all realize that the first go round, it was so quick to get money. We were like, we had a completely different system with SBA. It's called E-Tran. We were able to get a number right away. We could maneuver through it pretty quickly. The downfall is it opened up the opportunity for fraud. And so SBA had changed the platform this go round. We have a different platform that we're going through, requires more filtering, which is actually very good. We don't want to have fraud. That's not something that we're wanting. So we have to be patient and respectful that SBA has put this procedure in place to prevent as much fraud as that happened from the first go round. So I want clients to understand that this process is not as instantaneous as the first go round. And there are these procedures in place to help ensure that, the process is being handled properly by all banks. And so it's going to take a little bit more time because it's a new system, a new platform. It creates new questions, new frustrations, new things that we're not experienced to. And so SBA and Edward has done a great job of trying to help us through it. But what we have to make sure everybody understands is that there's plenty of money. We've just got to be patient through the process, and money is being given to the proper businesses that need it in time during this time.
All great points, Itzel. Thank you for bringing that up and making everyone aware. I want to turn to Bert and ask, what would you like the audience to know as it relates to Arkansas Capital Corporation being a facilitation lender for this next round of PPP?
Sure. Well, first off, I want to say appreciate Edward and his team. Anytime we have questions, they're there to answer. But as far as Arkansas Capital, as I mentioned earlier, we're a nonprofit economic development lender. So our CEO is fond of saying, we're not looking to be competitive in the market. We're looking to be relevant in the market. And I don't think there was a bigger way to be relevant in the market than PPP in 2020, and even so far in 2021. So as far as our process, we're doing it manually. We initially had a portal, and there was a few glitches in that portal, and we switched. We said, hey, we're going to start doing this manually again. We just wanted more control over the process. And we did that in the first round because nobody had a portal at that point. And we were number 13 in the state in terms of number of loans and dollar volume. And that was real just a kind of example of the team we have. I mean, we came in, all hands on deck. We worked on weekends. We would have worked Easter, but nobody would dress in a bunny suit. So we did take Easter off. So far this time around, we haven't seen near the demand but the demand is there. We're still coming in, and we work a few hours on the weekend, kind of just to get ahead for the next week, because we do have, as Itzel mentioned, we have forgiveness going on. We have the regular lending cycle going on, or lending business going on. I guess a few things I would mention that would be helpful, that I think are helpful when you're preparing an application, whether it's to us or anybody, is include a calculation sheet showing us how you arrive at your numbers. We have people, sometimes we get a 50-page PDF and we had to figure out where that came from. The best applications that we see the application, and then we have the 15, maybe 15 at the most pages of the relevant documentation. And even though some people even highlight the particular line item where that came from. So a calculation sheet is key. If you included a number in your calculation, make sure you include the documentation for that. That makes our life a lot easier. The application actually says on the instructions, no PO boxes, but you'd be amazed how many PO boxes we still get. So make sure you include a physical address on your application. And the application also says on a second draw loan, that if your loan is under 150,000, that you don't necessarily have to complete that part. We're requiring that to be completed, and I know other lenders are too. And that's just because we don't want surprises for us or you on the back end. So if you don't qualify, we don't want you getting it now and finding out later you didn't qualify and having an unexpected loan out there. Kind of the other thing is we do have to follow BSA, Bank Secrecy Act. So we're looking for a driver's license, articles of incorporation, and other organizational documents. And I think the last thing I'd say is, it's not rocket science. It can be tedious. Just find the instructions and follow. This time around, SBA has done a good job of kind of documenting what document they want and what line item they want us to use. So that's definitely been beneficial.
Thanks for that, Bert. Those are really helpful tips. And sometimes you said you're reading along, you might miss something, but good points. And to that point, you talked a lot about the documentation. I'd like TJ and Jason to both tackle this next question and talk about some of that documentation that's needed for small businesses to apply for the PPP loan.
Well, thanks, Ashley. Yeah, to follow up on that, I mean, the documentation is, and I think like Bert said, it is a little more straightforward. When we were looking at this about 9 months ago, 10 months ago, everybody was just trying to get something, and it was kind of read and try to review. Well, now with it being there, a lot of the documentation is now much more easily understood. So for instance, some of the things that we probably covered last week when talking about PPP is, the 300 employees, again, getting that same information that you had last time from your related to your employees from 2019 or 2020. But then also being maybe the biggest thing that people are seeing is the reduction in receipts. The cash receipts deduction has brought up a lot of questions from our side. And what should that be? And it really comes down to a couple different things. It's looking at how do you keep your books. So if you're on you're looking at cash receipts, really both on a cash and an accrual basis. For some people though, and what you can turn in is your internal financials. What does that look like? You may also have to turn in bank statements to support that. One thing that has come up that was interesting to note is that they did, and I thought this was good because there are a lot of companies, probably especially in the under $150,000 borrowers, are not as likely to have sophisticated accounting, may not have quarterly financials and things along those lines. So they did allow for the use of your year-end financials for tax purposes, because if you were down 25% for the year, you had to be down in a quarter, at least 25% in one quarter. It just made sense. And I think that was really a good move by the government and the SBA to allow these funds to get out, because people that, if you're at the point, one of the big things that's making I'd say somewhat of the question easier, but also people going through more of a calculation is the question of the 25% reduction. As 10 months ago, people had to answer a question of, well, do you have economic need? Well, that was really up for debate, and people got concerned about it through things that were being said in the news by members even of Treasury. Now it's more of a calculated process, and so that's made it, I think, easier for people to understand, do I qualify or not? So, Jason, do you got some things to add?
Yeah, thanks, TJ. And follow up on what TJ just said. While the 25% rule is out there, you still will have to sign a certification that there is necessity. And so please keep that in mind. You know, we've had very few clients worry about the documentation on necessity, but we have had some. And I think, as we said in our same webinars we had during the initial draw, I think documenting your necessity now, taking into account your concerns, economic conditions, looking at your client base is going to be critical. And a couple of other small points. I think, you know, now that we've gone through one round and we've been working on all the forgiveness applications, I think to continue to refine those documents on your payroll side, whether that be wages that were maybe earned in a prior period yet paid in your PPP period, or same thing with your hours. Merely turning over your payroll records may not be enough documentation to get forgiveness. And so think about that when you're working through your documentation. And same would apply to other expenses. I think most people have transitioned to think that we can get most of it done via payroll. There have been some who continue to, and rightfully so, use other expenses. But if you're going to use other expenses to get forgiveness, please make sure that you are keeping all of your bills and invoices and other records to turn those in. It's going to make your process a lot easier. And in a final comment, I do want to echo what TJ said. What we've seen is this 25% limit has been somewhat difficult, even for those who have struggled through this time. But pay attention and talk to your CPA or your banker about whether you're a cash basis or accrual basis taxpayer. That can make a difference in how your revenues are being accounted for in any one quarter, as well as just making sure you are accounting properly in each quarter those revenues year over year. So, but thanks, Ashley, and we'll turn it back over to you guys.
Hey, Ashley, if I could, I'd just like to, and I think all our presenters hit on some great points, but I want to pull us out a little bit and just talk about PPP versus PPP now with the first draw, second draw, and how the Economic Aid Act kind of changed some things around. So most of you folks know we had the original PPP, the program, Paycheck Protection Program that was authorized. That, as Itzel had mentioned, went out like very quickly and very abruptly to get money into the economy. And with that, we had an expanded eligibility pool of not only businesses, but nonprofits, and really looked at a 500 employee cap on the first round of PPP. We used all the same kind of payroll expense data in order to quantify how much a borrower could get. In this next round, what the Economic Aid Act did is it narrowed that focus down to saying not only businesses that have been impacted, but we're going to say businesses with under 300 or under employees are now eligible. So we narrowed that focus in a little bit more. And then we also required those businesses to have at least a 25% gross receipt reduction, or a reduction in their overall sales. That way we could see these businesses are the ones that are hard hit and they need the most support in this round. So we need to focus in on them. And that's how we have some of the documentation that the gentlemen were talking about needing to bring in to prove the reduction in revenue that they've suffered. And then B, of course, the employee base that they now have, where they do qualify as an under 300 employee employer. So hopefully that helps kind of put everybody into the ecosystem of where we're at in this entire process now a little bit better as well. Especially if you're new to the PPP program, I know it can be overwhelming.
Yes, and someone wanted to make sure the point was heard, clarifying that the 25% reduction in revenue requirements only applies if you are applying for the second draw. That's correct?
That is correct.
Yeah, first-time applicants don't have to meet that requirement.
Right. If they're applying as a first draw as the initial PPP, they go based on the original or the modified now Paycheck Protection Program requirements, where they're authorized up to 500 employees and the full $10 million loan because they never got their first shot at the Paycheck Protection Program.
Thanks for clarifying that. I do want to open it up for questions. I know we have quite a few people here in our audience today. I know there are questions. Some of you sent me questions prior to this session taking place. So go ahead and start throwing your questions in the chat. We'll get to as many as we possibly can in the next 30 or so minutes. I did have a question in my inbox that I'll start with. This person wants to know, is there a time frame estimated for the new 3508S with the 150,000 minimum to be active on the SBA portal?
I know our teams are working that final through clearance. I'm not sure if it's out yet. If it's not out yet, I know they are actively working on it. The team at SBA has been doing its requirements in order to really change and adapt the program from where we were under the original Paycheck Protection till now. As Itzel had mentioned, the security additions that we've implemented help to identify individuals' identity and verify their entities prior to issuing loan numbers now that we weren't doing in the past. So SBA is actively working. I do not know, and usually it takes about 3 weeks to get a form through clearance in OMB for the government. So we should be nearing that threshold anytime really soon here on that. And I am getting confirmation from my team that the 3508S is updated on our SBA website, and I'll make sure they link that into the chat as well.
Awesome. Thank you for that. I'm actually about to throw this next question in the chat for everyone to see. It's quite lengthy. I want to make sure you guys see and have the full understanding of the question. But it seems like in essence, this person's balance sheet shows a loss of 40,000 in net since last year. They want to know if there's a way to show that loss because the application just stops when it does not show a certain percentage of loss of revenue. Feel free to read the question on chat.
I believe the question is basically saying, although their revenue was higher, they lost money. They had additional expenses, and that may be due to additional PPE they were buying and other things to help with COVID. I don't know the reasoning, but probably Edward can talk more on it. But it is our understanding is it is strictly a revenue base to see if your company was impacted. It is not a net income based because those can have, I think they looked at it probably, hey, those have other factors beyond that. And there may be some other programs depending on the industry that this person is in that they might want to look at for potential assistance. There are other things outside of these programs that have helped a lot of other industries specifically.
Yeah, and to TJ's point, we're looking for businesses that have suffered, their income has suffered from loss of sales due to COVID. They've had to close their doors. They're not able to serve as many customers as they were able to prior to COVID, period. How you're recognizing expenses on your balance sheet and your overall business operation strategy is going to give you a lot of different ways, but we're specifically focused on looking at those businesses who have suffered during this pandemic, who have lost sales and are unable to continue their operations as the targeted applicants for this.
Okay, thank you. And it looks like Jamila Bird has her hand up. If you want to unmute yourself and ask your question.
Thank you so much. Thank you guys for hosting this series. I have been on a couple of the SBA webinars, but I'm still trying to understand it in layman's term. Dealing with the lending perspective of acceptable documents, especially dealing with sole proprietors and 1099 contractors. We're not that savvy when it comes to financial statements. We're not with a lot of accountings. We don't have all these accounting systems, but I have noticed that amongst us that we have who have tried to apply for these programs, let's say if I sent in my Schedule C, and then I have, of course, great costs of sales and goods and services, but then when you get down to the net income, it may show negative. So it knocks, I have seen when I go to banks, it automatically knocks us out because I guess they're saying, okay, we don't really see a positive flow of income, but technically we may have based on our cost of goods. But when it breaks down with our Schedule Cs, we're just knocked out the game automatically. So I really don't know. The other one I've seen where people have had low net incomes, but we don't really have a system where we're paying ourselves because we're really trying to stay afloat. So most of our expenses are basically into the business itself. So I don't know if that will be a part of, we would be even acceptable for the Payroll Protection Program based on these requirements. So anyone can answer the question for me.
Yeah, I'll let the accounting experts, if you guys want to jump in on that, or if you'd prefer me to take a stab at it, it's up to you guys. You get.
I mean, yeah, if I'm following you, Jamila, yeah, there's a, they've made adjustments for self-employed individuals. You'll just need to be able to provide your 1099s for those contractors that you've paid, as well as your Schedule C from your 1040, or if you're for whatever reason perhaps a Schedule F, which I don't think you are, but that documentation itself should work unless I'm. TJ, do you have anything different?
May
No,
I
I think
continue?
that's right.
I'm sorry.
Same way also, if you're looking at the second round, I believe you compare your top line, not your bottom line as well there. So you'd be able to add back any cost of sales and designed to get that back to top line.
Yeah, and as TJ and Edward pointed out, I think that's been the continued issue I think that we've seen is this 25% mark being top line. There's a lot of people that have struggled from a net income standpoint, but the top line issue has continued to hold things back. And I'm curious, Edward or somebody else, if you think there's going to be any movement on the government side, as we saw with the first round when they loosened some of the forgiveness requirements. Do you think this 25% rule may be softened a little bit?
Right now, I don't see a significant appetite. I mean, for us, of course, we'll implement whatever's given. But one of the biggest challenges or opportunities for that is working with your congressionals and making sure they're aware of the number of impacted businesses in our communities that falls within. One of the big industries that I've spoken with a lot at length here recently is the restaurant industry, and that specific 25% reduction falls on a calendar basis, which is a requirement by law that we've already tried to push back and see if we can get some more flexibility in using any 90-day period to consider that. But it's hard and fast in the law, so we'll need a law change in order to do anything, just moving those calendar dates or that 25% reduction. So once it's approved by law, we're there pretty much guiding the implementation. So there would need to be another change. And I know right now there's another relief bill working through, and that would be the ideal spot for any changes to be made that would assist more businesses that way.
Can I ask a follow-up question? So the 25% top line, I'm not quite sure what you mean. Is that dealing with cost of goods, or are we looking at the net income? Because the issue that I'm having is the net income. If it shows negative, does that automatically deny you from the program?
No, it should be that you take your net income and add back your cost of sales. I mean, some people look at it as, well, revenue is revenue, but I believe in the way that Treasury and the SBA actually words it, it'll sometimes say net income and add back your cost of sales, which in theory gets you back to the same way, but it's receipts in, not taking into account really your cost of goods. That's what it's designed to do. What was the economic impact to your business, not necessarily your bottom line. So you could have lost money as a business, but still qualify. And actually, that would
Right.
be
Yeah,
Jamila, are you
I
sorry.
want to hold on. Let me clarify real quick. You're talking about, and what I want to specify is the second draw. Top line is your total gross receipts coming in, the amount of money you collect in a year based on your operations or sales. You have to see a 25% reduction off of that in order to qualify for the second round.
So I haven't even applied for the first one because a lot of my friends, as soon as they send in that Schedule C for 2019, let's say if I made $60,000 of cost and goods, I did my expenses, that line 31 on, which is the net income, the lender went to that net income to determine the eligibility, and they denied us for that. So I'm not particularly sure when I understand the 25% top line when you're comparing it to the first and the second draw, but we haven't even been able to even go through the first draw because as soon as you see that net income, we're out.
I'm assuming, Jamila, you are a self-employed, you don't have employees.
Self-employed, one owner, and then my friend is a 1099. So
Right.
1099 is a little bit much easier because you can see the 1099, you see they can make 64,000. They're not really using their Schedule C. You can determine it based on that. But if I'm self-employed, you're not going.
Right, and you have no other employees. The
Right.
way regulations written, in order, technically your net income, if you're not drawing a W-2 salary, your net income is your salary. So that's how you multiply the 2.5 times is based off your salary. In a Schedule C situation, it's different because, like I said, as a single member or as a sole proprietor, that net income is your salary. Normally in a situation where you have multiple employees and you have a W-2 salary, you would multiply that to get PPP money. But in your situation, because you don't technically show a salary because of your net income, that's what's disqualifying you.
Right. Exactly. So that's what I was trying to find out. Is there another way of documenting for me as a salary other than a Schedule C net income?
W-2 would be the only other way to do it. But I don't know, and I'm not an accountant, so I don't know if it's too late for you to be able to W-2 yourself a salary. Mm-hmm.
I didn't know that I could. I mean, that'd be great if that was an option for me. I sat down with maybe the CPA can tell me, can I W-2 myself as a sole proprietor, or if I'm a one owner LLC?
Yeah, that's an accounting question because there's obviously taxes associated to being a salary employee versus drawing, again, as a Schedule C. And if you're not salaried, like you don't have a set W-2 salary, you're being taxed differently on the distributions that you have from the company. So
Right.
Hey everyone, I'm gonna cut this conversation. We have a number of other questions.
So sorry. I'm so sorry. Well, thank you
You're
guys.
fine.
I appreciate it.
Thank you for the question. Another question, we'll do some rapid fire questions. This person wants to know if they still have funds from the EIDL loan, can they get a second PPP and pay it back to make it forgivable?
So funds from the EIDL loan and PPP are separate. If you did initially get a PPP and they reduce that EIDL loan advance amount from that, you'll be repaid that back. But an EIDL loan is separate, completely separate from the Paycheck Protection Program. Now, in order to qualify for a second draw on Paycheck Protection, if you did receive the first one, you are required to use all those expenses completely and eligibly in order to qualify for the second round.
Great, thanks for answering that. Someone needs some clarification on the full-time requirements of loan forgiveness. They want to know, it looks like their business is not required to have a full staff. They have employees that have gone out on medical leave. Do they need to hire to cover the employees that are out on medical leave? How is the best way to maintain that full-time status for the loan forgiveness?
So for loan forgiveness, if you're unable to hire back your employees and you've had, let's say you've had an excess loan amount that no longer cover that, as long as you're not terminating those employees as long as they're under a covered reason that your employees aren't working, let's say there's state guidelines that prevent you from reopening, et cetera, those are covered under the
Safe harbors, I think is what.
Safe harbor. Thank you, TJ. I appreciate that. Those are covered under safe harbor, and then you would just use those funds and extend out the time frame that you were expecting from, let's say, the original 12 weeks. You have now up until 24 weeks to use those funds. So you have the covered period is up to the borrower's choosing, and as long as they're using those funds for eligible covered expenses, they should be eligible for forgiveness.
Yeah, and if you want to get a list on that, if you go to the application instructions, I pulled it up real quick. It's on page 5. There's actually a list of an example list of things that could have caused people to have a reduction that is under those safe harbors. So you might, whether it's things like Health and Human Services or OSHA requirements or CDC, there's a number of different things that you can look at. So that may be helpful.
Right. And another question, if a church had housing allowance compensation disallowed in the first draw, can we reapply and use those expenses now?
You know, on that, I would definitely tell them to speak with their lender. SBA has provided guidelines on loan increases, and those are in a very limited access to those loan increases based on the new documentation. Housing allowance compensation wasn't changed with the Economic Aid Act. That should have been authorized, if I'm not mistaken, in all original applications as payroll costs. So you would want to speak with your lender about that, and your lender can work with SBA to find out what its best course of action is with that particular loan.
Thanks for that. I'm reading through our comments now and going through to see where the questions are. Give me one moment.
Actually, while you're looking through, I was going to mention someone came through and said that the 3508S is not available on the SBA portal after Edward said it is. And I checked our portal and we do have it and we are able to submit it and we have been submitting it. So I was a little concerned when I heard it might not be. So I did check and see what we've been submitting. But as far as I know, we've been submitting it. So.
No, that's a good point. Thanks for mentioning that. This person asks, what is the date to use funds completely before applying for the second round of PPP?
Somebody else, I'll take that if somebody else wants to.
Go ahead.
You can apply for your second draw now. The second draw applications are open. They just won't disperse the money until those funds are used in its entirety. So work with your lender. If you have the same lender of record that's willing to accept your application, that'll reduce your amount of paperwork that you have to deliver to the lender as long as you're using the same time period. But you can apply for that second draw loan.
I think this was touched on a little bit earlier, but here's another question asking if it's wise to use the same lender that they got their original PPP loan from. Just wanted your opinions on that.
Probably easier because that lender already has all the information. If you had come through us and are going to get a second one, we already have a lot of the information in our portal. So depending on the situation, I would say more times than not, you should be able to use your same lender, but you know, maybe your existing lender was not very good at responding back to you and you want to use somebody else, then it's definitely a personal opinion at that point. But typically it is easier for you just to go back to your existing lender if they did a good job the first go round.
Great. And one that was up here earlier, the question was, is there anything available for sole proprietors, i.e. individuals who rent vacation properties? No employees, but no rents either.
No, that would be a passive income. And so that's just a general SBA eligibility issue.
Yeah, and I'll add a little color to that, because I think we've seen a lot of passive real estate investors come looking for this. I know there is rental assistance coming out on the rental side for the individual occupants. And SBA is actively understanding and really rethinking its stance on Airbnb rentals, since those do operate as B&Bs in some cases. Right now, though, they're still considered passive entities to the SBA and therefore ineligible for SBA financing.
Thanks for that. Reginald, did you have a question?
Yes, I have a company I just started in around August. So it was after the deadline. So I've been having an issue trying to fund my company, and I don't know what I need to do as far as getting it off the ground. I got employees, but I don't have any revenue to even start trying to put them in the payroll system. So I'm really at a dead moment now.
Yeah, Reginald, I'll take this, and if anyone wants to jump in, I think first step would be to sit down with one of the SBA resource partners to do some counseling. They can get you in a good direction to figure out exactly how much capital you're going to need and what the business plan looks like that's supporting your business. What industry, if you don't mind me asking, are you in?
My company is called Moonbeam Investments, but me and my brother, we created the company to try and get into the basically the low income housing area and help in that sector there to help those less fortunate individuals get better situations for as funding, learning them, teaching them styles of how to save, where to start depositing their funds, and how to become better citizens on their own without having to depend in the future on government assistance.
Okay, Reginald, it sounds like your actual best first step would be SCORE. They can help out those individuals who are in the ideation stage where you're at, looking, maybe this sounds like a for-profit versus a nonprofit entity. It kind of sounds like you could be either one. And my team's going to go ahead and put in the chat link SCORE's contact information. And if you sit down with a counselor, they can help get you guided in the right direction and get your business plan at least started so you can understand how much funding you need. And then we can help refer and get you placed in the best place for that funding need. All right?
Yes, sir.
Thank you, sir.
Thank you.
Thanks, Reginald.
Yeah, I see there's a question in here on EIDL. Second round of EIDL. EIDL is still open. If you are a business that is operating and have economic disadvantage or has been impacted by COVID, you can apply for that EIDL loan, and that's the direct loan from SBA. That's completely separate from Paycheck Protection Programs, and that's available on SBA.gov directly.
All right, we have room for one more question. If anybody wants to ask one last question in the chat.
I have a question.
Go ahead, Bob.
On our first PPP loan, it was given in our lowest quarter. that qualifies for the 25%. After that, we're on a cash basis. We didn't qualify. Do we have to show that first PPP loan or money?
Well, if you're asking if the PPP loan money is a part of your receipts, you do not include that as a part of the cash receipts. It's just real business revenue receipts. And there's a number of things involved, but PPP loans were specifically excluded.
And it does qualify. We just have to use it as income for the rest of the year. It was in March, one of the first ones, but it put us on a cash basis for the rest of the year, more than the 25%.
Well, yeah, you just exclude that when you're looking at, I think I'm understanding your question right, is you're trying to decide if you qualify for the 25% reduction, but you don't include that when you're doing your calculation. So that is not considered income. You would just take out whatever you received for the PPP loan.
Thank you very much, TJ. And I want to be there where Mr. Morris is with the sand and the palm trees. Still Arkansas. Appreciate y'all.
Welcome.
Thanks for the question, Bob. And with that, that wraps up question Q&A. I hope this was helpful. Lots of questions came through. If you're still struggling, have questions, as it was mentioned in this session, please talk to your lender, your bank partner, and also the SBA is a huge resource. Go to their website, make sure they've got a FAQ page and everything to help you out with navigating this PPP loan. Guys and gals, I appreciate you being a part of this panel today. Thank you so much to Edward, to Itzel, Bert, TJ, Jason. This, like I said, was very informative. Again, for those that may have missed it early on, this is recorded. It will live on our Facebook page. You can find us at the Venture Center on Facebook. There, if you missed anything or want to share this video. Thanks again for being with us. We want you to be a part of the Venture Center. If you can go to our website, learn of any additional programs we have going on that you can be a part of. And with that, thank you and have a great Friday.
Thanks all.